Welcome, ladies and gentlemen, to another round of Trade Masters. This is your returning champion, Coach Tyler, joined by Old Money Holmes. Greg's joining me this week. Greg, how you doing?
Doing good, man. Doing good. I'm actually looking forward to your Thanksgiving tomorrow.
Hey.
Markets are closed, so I get to watch football and eat just like you guys do. So
listen, it's gonna be a good day. This is the pre-Thanksgiving festivities. So yeah. We appreciate, as always, all of you out there that are joining us with Team Tackle and anybody who may be joining just to check us out. The name of the game here for Trade Masters is it's competition between myself and my challenger, which is Greg tonight. And we have 3 rounds. So we're going to both give you a trade pick, and you're going to decide which one you like better. The first round is going to be a directional trade. The second round is going to be what we call a cash flow trade. And then the third is a wild round where we can pitch any stock or strategy that we want. And after each round, you, the participants, will get a chance to vote. Best out of 3 wins and comes back the following week, either through dumb luck or skill. I've been around for a bit and hoping to stay another week, but Greg is a worthy contender, so we shall see how this goes. Greg, before we jump into this though, I do have a couple of announcements / reminders for the team here. First off, I'm going to put a couple links in the chat window, so let me pop this up. All right. We got Coach Tim there. Okay, so a couple of things. If you really want to up the excitement and the engagement as you watch Trade Masters, we do have a Discord channel for all of the pro members. And if you go over to that Discord channel and you look down in the voice channel, you will see Trade Masters Hangout. So as Greg and I are pitching this, anybody on the team who wants to chat about our selections, give us some feedback, talk with Coach Matt, Coach Tim, they're in that channel right now. So for those of you that are part of the team, go check out the Trade Masters Hangout. They do that every week to kind of get more engaged as Greg and I or whoever the contenders are battle it out. The other thing I'll mention here just briefly is if you missed, we had a sweet YouTube webinar on Monday, swing trading webinar, and I'm actually not able to get the link in the chat window. So if somebody's able to do that for me, throw that link in there. You guys should check that out. Coach Matt did a wonderful job teaching us about swing trading, so check that out on Monday. Then the final thing, and then we'll get into this, is we have released our annual holiday sales. So any of our products, just as a reminder, they have gone on sale. So check those out over at tacklestrading.com on the store tab. You'll see some sweet discounts that the team is offering. So enjoy that. And without further ado, Greg, let's rock and roll. We're going to start with the Delta round, and I will allow you to go first. So show me what you got.
All right, I'm going to preface this. I feel like you and I are like a football matchup tomorrow. Chicago Bears versus the Detroit Lions. And you're the Detroit Lions, my friend, because I'm a Bears fan. So I'm gonna have to whoop you good tonight. Much like the Bears are going to do with Detroit tomorrow.
Listen, I'm ignorant in all things football, so I don't even know if that means I have the edge or you have the edge. But
I know, but Tim and Matt are losing their minds right now, and that's why I threw that in there. So let's start with Caterpillar, bud. It's looking like a pretty sweet setup right now. I'm digging it. So before I go down this rabbit hole with Caterpillar here, industrials have started to make a turn. If we look at XLI a little bit, starting to stabilize right at that 20 MA there. I like how that's setting up as well. Looking forward. It's kind of pinched right now, but I'm looking forward to popping back up over that 107.65 high there. So with that said, kind of holding its own there. I really like how Caterpillar has responded. If we look back at that, A little rounding bottom there, pushing back up to a breakout level there. I think we get a pretty quick move from that 208 essentially up to that 200 moving average, which is right around the 215 level there. I think this is going to be an extremely quick move when it blasts off, because it is a pretty short distance. This is an ATR of $4.50. So it's only about an ATR, 1.9 ATRs to get to where do we want to go here. So I'm making a very quick trade here, just a quick hitter, but I love this setup for the reasons. Looking at the December 17th, if we can go to the trade tab there, Mr. Tyler. Looking at December, so it's 23 days, short trip here. Looking at buying, doing a bull call spread here. Looking at buying the 207.50 and selling the 215. So the way I do my bull call spreads is I buy at the money or slightly in the money, and I look to where I think it can go. Like I said, that 200-day moving average is sitting right around that 215 level there. I think it can get there very, very quickly. So that's really what I'm looking at here. Now, the reason I like this the most is this debit for this trade, 23 days. You do have to worry about theta a little bit. We're going to need this move to happen soon. But as I said, ATR, we basically need less than 2 ATR. So it could happen very quickly. But essentially, we're looking at a 285 debit here for basically a potential reward there of about 465. But that in itself doesn't look all that attractive. Here's why it gets a little more attractive in my estimation, is right under that 50-day moving average is the 200 strike price. So that not only is it that moving average that's propping it up, but second of all, it's a nice round number at 200. So I'm putting a stop loss on this trade at 199.50. So just below that 200. So not only do I have one level of support of the 50-day moving average, but I also have the round numbers of another level of support there. If it breaks through that, I'm good to close the trade. At 199.50, this stop loss, that gives us a 3-to-1 reward to risk. That's why I like this trade. Quick, easy, 3-to-1 risk reward.
Nice. Greg, I have a question.
Yes, sir.
Kid Poker 007. First of all, welcome aboard. We're happy to have you. Greg and I are feeling very giving today. Greg, tell me how you would trade this if you just traded straight stock. Would you do anything different? Let's say for those participants that maybe aren't as well versed in options, how do you do this as a stock trade?
So stock trade, I get in above the high of this last candle here, but my stop loss doesn't go down to 199.50. My stop loss goes right below that candle there. Right around the low of that candle there. Because I'm using an option, because there's some leverage there, because I know what my risk is, my fixed risk, I already know that I can go further away, give myself a little more leeway, and not risk as much money as I would in a stock trade. So I want to keep my stock trade a little bit tighter stop loss. However, it's still got to be outside of that ATR, obviously. But with the option, I get to give myself a little bit more cushion and still give myself a really good risk reward setup.
Perfect. All right. So using the options, you got the cushion, you give it more room, you got a little more leverage, cheaper trade. But the beauty of the directional round here is we're finding pretty chart patterns, clean chart technical setups, and we're just enhancing it. Instead of buying straight stock, we're throwing out an option idea. But certainly, most every directional trade we're pitching has a good enough chart where you could certainly swing away with long stock. So, okay, Greg, I like it. Coming at me with Cat. I'm actually going to stay in a similar space. So I'm going into transportation, which tends to get lumped in with industrials. In fact, in the olden days, when Charles Dow created the Dow Jones Industrial Average, he later, soon thereafter, created the Dow Jones Transportation Average. So it was all about the Dow Jones Industrials and the Dow Jones Transportation Average. A lot of Dow theory built around those two indexes confirming. So I'm feeling a kinship towards your industrial pick here, Greg, because I'm coming at you with a transportation stock. The choo-choos, the railroads have been rocking here recently, right? Railroads have been rocking here. I like what's going on in Union Pacific. This is a stock we've highlighted in our options report. Nice little breakout. CSX, you could see at its high. I'm always impressed when an area holds firm when the rest of the market shows a little bit of weakness, right? So this area has been hot. I'm not going to play the breakout in CSX or UNP though. I'm gonna go at you with CNI. Right? I mean, speaking of kinship here, Greg, you, my friend, this is like speaking your love language. I got a Canadian railroad here for you. Canadian National Railways. Let's look at this from a multiple time frame perspective, starting with the weekly chart. I have a rising 200-week MA. I got a rising 50-week moving average, rising 20-week moving average, rising 9-week moving average. And I just love the stair step pattern over the last couple of months. Super big green bar here, little pullback right to the 9, and it pops again. Can we have maybe history repeat? Little pullback to the 9 EMA. Got a nice little green bar. Kind of twin bullish reversal candles. I'm digging this weekly time frame. 9 EMA providing support along with old resistance. So I love the zone on the weekly chart. A lot of reasons why buyers should be interested here. You drill down to the daily, and you can see that the latest advance was accompanied by a nice earnings announcement. Love the response to earnings, very positive. I am virtually always interested in buying the next dip after a good earnings response. CNI, a little more gradual than some of the maybe tech names. You know, you could say, hey, that pullback kind of took a long time. Am I concerned? No, because that's the nature of the stock. I mean, last time it pulled back and took a while, but once it popped, you saw some pretty good strength there. So I like the pickup off of support over the last couple of days, particularly in light of the fact that the market hasn't done well the last few days. This is completely ignoring that. Getting its head above the 20 MA as well. So I think this is just easy to build a play off of the weekly time frame, essentially buying over this week's high. I think that the pivot low is a good stop area. You can go tighter if you want, but that's pretty clean to me. And then ultimately, I think it takes out the pivot high, maybe gets up towards 140. So I want to give this a little bit of time. Maybe one more month than what Greg did with CAT, but CNI moves a little bit slower, right? So I'm going to make sure I buy enough time. I'm going to use January options. It's right around 130 bucks, and I'm just going to mirror the same trade structure as Greg. Bull call vertical spreads are a very popular directional trade because they're simple and they have a better probability than straight buying calls. So Greg, you know where I'm going with this. I'm going to buy the Jan 130. Okay, and I'm going to sell the Jan 140. So a little $10 wide bull call spread. The pricing is pretty good on this. We usually like these to be less than $4. This is going to be 3 and change. So I'm going to buy the 130, sell the 140, paying let's call it 350 to make the math easy. Paying 350 for a $10 spread. So I can make $6.50. So it's a really good ROI potential. And if you put that stop under the pivot, here's what the risk graph of the trade looks like. If we put the stop under the pivot here, call it 126.5. You know, you're risking 130 bucks with I think a well-placed stop, and you got, like I said, 650 of max profit. I'd probably bail with around $300 profit, but in any case, you're risking 1 to make 2, 3, or 4. So great risk reward, great technical pattern. Greg, what you think?
Well, I don't think you can go wrong with Canadian, right? So no, that's good. No, it's a good trade. It's the pops that these have gotten have been pretty impressive. It's almost like this thing has gotten a new personality, which is kind of nice to see.
Yeah.
Railway, I think the railroads as well, with the supply chain thing going on. I think they're getting a new lease on life as well. I think that's helping out this trade a little bit. Yeah, as you said, transports are doing a little bit better right now. Yeah, I can't argue with the trade. I like it. My only question was going to be, and you kind of answered it, is if you hit your short strike, would you close the trade even before the time decay? You know, because that's really one of the questions I get a lot. You know, bull calls. We love bull calls because they're cheaper than regular options. They have a bunch of different advantages, really. But when it hits your short strike, and again, this one does move slow enough that I don't think it would be that big of an issue. But let's say it gapped up, similar to after earnings, and it did hit your 140. What would your thought process be there?
Well, two thoughts. For starters, if I did something like a 130, 135 bull call where it didn't have that much room to run, that's where I tend to leave it on a little longer, because if you get a quick pop to 135, you don't really make a large percentage of the gain. But when you do a wider vertical like this, where your higher strike's pretty far away and you have a big net delta, like my net delta, Greg's around maybe 23, you'll make quite a bit of profit by the time you hit the higher strike, which for me essentially gives me a green light. It's like, look, you're almost 100% gain, even if you don't wait at all once you hit that. So in this particular situation, I have no problem with using the 140 as the, hey, if I hit it, I'm out of here. If you want to try to squeeze a little more, I think it's fine. It would just be a matter of where do you want to put the stop, and I would tighten it up. The other thing I think that comes to mind is when this thing pauses, it pauses. Like it takes a nap. And so I don't want to overstay my welcome and essentially capture a nice pop to 140 and then not tighten the stop or whatever. And then it just gradually grinds back down to 135 over a couple of weeks. That just doesn't seem like good management. So in this situation, I'd be more inclined to bail around 140 or at least tighten the stop.
And that's similar to my thought process is, you get to your target, look at what you're taking, even if it's not 100%, in this case it would be, but even with other bull puts, you're getting 60, 70%, and it takes, a very short period of time to do that. Even if you're only getting 30 or 40% in a short period of time, it's really worth your while to manage that correctly, either by moving a stop, taking the trade off, taking partial, profits, whatever the case may be, whatever you have in your trade plan, I think is pretty important. So.
Totally agree. All right. You all have the poll in front of you. So CNI for me, Canadian National Railways, Caterpillar for my pal Greg. Greg, while they're doing all that, why don't we kick off the theta round? So can you explain for them what the difference is when we say the theta round? What are we going for here?
Yeah, so it's the difference between, so if you think of the different types of traders, we have directional traders, and really delta translates to direction, right? So we have delta traders, think of them as swing traders, scalpers, whatever. You're looking for movement. The price has to move to make money. When we start talking about theta, we're talking about time decay. Ideally, we want movement in the price, but we'd be happy even if it just stayed the same, because what we're trying to do is make money off time decay. So it's just a completely different perspective of when you're doing a trade. One, we need movement. The other one, we just need movement or need movement to not go against us, right? And then we need to let the sun go up, the sun go down over and over again. And that's how we get paid, is through that time decay. And so this, when we talk about theta, it's a cash flow trade, meaning, we get paid over time as opposed to a very directional move. Now, obviously some cash flow trades have a directional component to them as well, but mainly we're looking for that time decay, that slow drip of capital coming towards us.
Well said. So I'm going to let you kick it off on theta round.
Awesome. Let's look at the crude oil, the crude light chart for starters. So I'm going to the energy space for my theta pick here. I love this response here. Little pullback, found some support around the 75. That's been a level. Yeah, you got her. It's been a level since basically June there. Resistance in June, resistance again in September. Now it looks like it's showing support. We're sitting right at those moving averages there. So I kind of looked at this as kind of a worst case scenario. I personally think that oil is going to continue up, but the level that it's at right now, you've got the I believe the 9 MA there, you got the 50 MA there, and you got the 20 right above there. That could cause us that could be resistance. That could cause us to slow down, could cause us to reverse, could cause us to go sideways. It could do a bunch of different things. So as much directionally as I'd love to be trading this is where I kind of look at theta and I go, if it goes up, I want to be happy. If it goes sideways, I want to be happy. If it goes down a little bit, I still want to be happy. If it goes down a lot, then I was completely wrong. I'm still going to be happy because I have a stop loss. But I looked at this and I thought, okay, what kind of trade can I set up where I could be happy three ways and only somewhat unhappy in one particular way? And that's where the theta trades come in. So what I was looking at was ConocoPhillips, COP. So ConocoPhillips here, pull back down to the 50 MA there, spent a day and a half under the 50 MA there. Mind you, I like how this is setting up. 200 is up. The 50 MA is really aggressively up, which is good. Again, we've got the crude oil chart helping us out here. This to me looks like a reversal pattern. We had those peaks there. If we draw a line kind of going down through those peaks, right? We've got our reversal, we've got our break here. So it's broken the trend line. It's above the moving averages. We're just about where that 9 is going to cross that 20. So we've got a little pop here. Now, having said that, these stocks that are tied to the oil chart, if oil starts to trim sideways, I would fully expect this to do the same, because this chart is not that much different than the chart of crude light. So if it chops sideways, I want to be able to say, you know what, I'm still able to make some capital here, even though I think that there is potentially a directional play here as well. So what I looked at here was again, I'm going a lot of quick hits today. What I looked at here was a quick bull put spread. Now I'm looking at the monthly options for December. So we go to 23 days out. Typically, I like to go closer to 30, but this one just happened to work out well. We've got lots of volume and open interest, as Tyler has on his charts there. Now, for me, I like to get out under support. If we go back to that chart real quick there, Ty, if you look at where those candles are, right around 69.50, okay? Right around there, 69.50. My thought process here is, if this price falls below 3 moving averages and then falls through that support, it just wasn't meant to be for this trade. So I like to kind of build them out there. So if we go back to the trade tab for me there, I wanted to look at the 69, selling the 69, buying the 67. So $2 ride, $2 risk there. And I need at least 10% credit. Well, in this particular case, I'm getting 25 cents credit. So I'm getting well over my 10% there. And I've only got $2 risk, which, with the credit, it's $1.75 in risk. And I've got, what's my delta there? The delta is about an 18. So I've got an over an 80% chance that this stays above that. I've got lots of cushion in the moving averages. I've got lots of cushion in that support level there. So, and most importantly, the stock's already moving in the right direction. So as I was kind of saying before, if it goes sideways, I'm happy. If it goes down a little bit, still happy. If it goes up, still happy. If it drops like a stone, obviously you got to have an exit plan for this. If you're happy with the risk that you've got between the bull put spread, you can just let it ride. If not, you could use a stop loss below that, maybe at the short strike price there of 69. So yeah, just an easy, and again, real quick, 23 days, pick up over 10%. What is that, like 12.5% for 25 cents? Something like that.
Yeah, you're 25 on 175, 14.3.
14. So 14% there. So 14% for 23 days. Like you said, lots of cushion here. These are the kind of trades I dig. And again, we're getting that assistance from the crude light chart as well.
Okay, I got a question on this one.
Sure.
How do you decide if you're going to do a $2 wide versus a $3 wide?
So $3 wide, again, it comes down to credit, right? So I looked at the $2 wide there. I could have went $3 wide, $4 wide. It really comes down to however you can build the trade out there. I just looked at it. I need at least 10%. I actually like to keep my risk a little bit lower. For me, I do see that 0 there for the open interest. That might cause us a bit of an issue there. Might have to go an extra dollar wide. But I'd really prefer to keep the risk low. So I'm talking overall risk here. Sure. So if I go the 3, then I'm risking, what am I risking? 266 there. Yep. Potential risk versus $1.75 there. So that was my thought process there.
Got it. Yeah, and I just ran the number. The ROI is a touch better on the $2 wide. You're 12.8 on the $3 wide. So
Yeah.
I dig it. I'm going to be coming back to energy in the wild card round. So you've laid the groundwork for me. I like the analysis. Okay, so bull put on cop. I am going to go to a completely different sector, and I'm going to go with semiconductors, which have been red hot. Let me tell you what I find very, very compelling about both technology and semiconductors. This area got smoked. 3 days ago, there was a nasty bearish engulfing candle. We call that an outside bar or an outside day, where the market was extremely bullish and then sold off throughout the day and closed at the low of the day on volume. So massive amount of profit taking in semis. NVIDIA had a big downside reversal. AMD, same thing. Qualcomm, kind of an ugly down move. And it's like, oh, could this be a short-term top? And the thing is, we barely dropped after that. I'm very impressed by how quickly buyers returned. Yesterday was impressive. Today is impressive. It doesn't look to me like they want to abandon their darling semiconductors, right? Traders love this area right now. So I've had many of these on the watch list because they're red hot. They have good momentum. They have good strength. That's an area that we like to play in, obviously, as bulls. And I've been waiting for a dip. And some of them didn't give us enough of a dip, like AMD, right? It's like 2 down bars. That's all you get. I'm right back up. And it ripped 5% today. It's like AMD, I could have used 3 or 4 down bars, but they didn't let it come down that far. NVIDIA, same thing. You got basically no downside follow through after that nasty red bar and right back up 3% today. The one that I find interesting and that I'm going to build a trade around is Qualcomm. I like Qualcomm for a couple of reasons. I think it's such a baller move when you're able to do what this thing did on earnings and essentially clear a 10-month trading range in a single bound. And then you had another monster breakout over resistance to an all-time high. There is some serious accumulation going on in Qualcomm. So I tend to believe that dips get bought. Well, you just got your first real dip since this had a good earnings announcement. And I just love how unwilling Qualcomm has been to give up ground. I've been watching this over the last 3 days, and it's just like, can I get a downtick? Can you just drop 50 cents? You're $181 stock, and they won't let it budge an inch, which tells me that it goes higher, that this is a dip worth shopping. So the chart pattern is compelling. Little 4-bar retracement to a rising 9 EMA. I would have preferred a deeper retracement. Doesn't seem like they're going to give it. And so I'm interested in doing a bull leaning play here. The other thing that I really like about Qualcomm is the volatility's been so high. You can go way, way, way out of the money and sell options and get a pretty good premium. So it lends itself well to building a credit spread. I'm going to have to go to January instead of December. I will tell you, and Greg kind of alluded to this, we're getting to the point where it's starting to get tricky building December trades because you have obviously Thanksgiving holiday. This next 30, 40-day spurt, maybe 45 if you include New Year's Eve, like there's a lot of holidays. And so it's just tricky. It's just tricky to build it with 3 days. So I'm going to go out. I always favor monthly options. I'm going to go out to January. 58 days is fine. I don't think it's too long at all. They're going to let me get a lot further out of the money by going that extra month. And you have to ask yourself, do you think, how low do you think Qualcomm goes if it pulls back? Do you think it goes to 175? Do you think it goes to 170? Do you think it goes to 165? Do you think it goes to 160, 155? Listen, I would love to sell bull puts down at 130, but they won't pay me anything. We're going to be able to build this at 155. I can sell a 155 put and buy the 150. I can do a $5 wide bull put spread for 50 cents out to January. And I love getting all the way down to the gap area because they freaking love this stock. For them to go 155 up to 190, back down to 155 seems a little unlikely to me. It would also have to take out its old major resistance, which I think is unlikely. So I like that 155 spot. So I'm going to sell the 155. It has a 13 delta, so very far out of the money here. Reset this. All right, so sell the 155, buy the 150, get your $50. You have about an 87% probability. I think it's even higher. And I would not get stopped out until this hits 155, which I think is, like I said, unlikely. So really far out of the money, bull put on a really, really strong semiconductor with, I think, a really compelling pullback. That's my theta trade. Greg, feedback, what you think?
Yeah, I can't argue with the setup. Yeah, that's a lot of cushion, man. That is a lot of cushion. I mean,
look at the weekly.
Oh yeah, it's insane. No, it's a pretty chart. Just a little bit wiki on the daily chart right now, but you know, I think that's expected to after such a run. You know what I mean? You got some wicks at the bottom and the top there, but yeah, like you said, you got such a cushion there. It's really hard to argue with it. The only kicker is the risk, right? And the time. Personally, I like a little bit shorter time. I might have, and I know this says weeklies there, I might have looked at the weeklies just to see if there was a spot that I could have built, maybe
somewhere in here.
Like the third, 29.30. Just to, again, I don't know what the volume and open interest. That's good enough.
It's good enough. You could do it. Yeah.
Yeah. So you might have been able to build a trade there where it's just the old trader in me. I've always kind of felt that right around that 30 days mark is the sweet spot. You know, anything can happen between now and January, but I'll tell you, that chart looks good, man. It's solid. It's
well, and you could do, I'm with you. I think you could do 165, 160 if you want to go the, what was it, 29 days?
Yeah.
Right. If you like the 29 over 58, they're just making you go up $10 to 165. Yeah. And so it's just a matter of, is it worth it to you to expose yourself for a few more weeks in exchange for getting the extra $10 cushion? Ultimately, that would be the question, right?
Absolutely. Yeah.
Yeah. So
good trade.
Yeah. Okay. So good round. So Greg, ConocoPhillips playing the energy dip. Myself going with semiconductors with Qualcomm here. So remember, we do have the poll up. Everybody gets a vote. All right. You want to take ownership of who wins and who loses. You want to be a part of this. You got to vote. You got to vote. Get on YouTube. If you're listening to this, pick up your phone, get on your computer, grab the keyboard, clickety clack, vote for Greg.
This isn't like our national elections. This actually counts. You know what I mean? This is a big deal.
Listen, there are 39 people on here right now. You account for 2.5% is your weighting in this calculation. And some people on here, I mean, this is kind of the national election because only half of you are voting. So quite frankly, you account for like 5% of the vote. So get it done. Give us a vote. By the way, Greg, I did eke out round one. So, but you kind of won because you're Canadian and they voted for Canadian National Railway. So everybody's a winner on round one.
There you go.
Okay. While we're tallying here, round two, theta round, let's go ahead and kick off wild card. So I'll go first this time.
Sure.
All right. So we'll switch this up. I'll go first on wild card round. So anything goes. I can pitch anything. See if you guys like it. I'm going to go back to the energy space. And let's embellish just a little bit here. The crude oil pop here or hold of support gains significance when you look at this longer term chart. Greg knows this. 75 has been a key level. Us holding 75 this week was a victory for oil bulls for sure. And so I like the thought process here that, okay, oil's found support. Maybe we'll do a theta play, right? Which worked toward the ConocoPhillips bull put. Here's what I find interesting. So oil finds support, but to your point, still has work to be done, still needs to get above these MAs. What I find interesting is the energy sector has been more vigorous, more buoyant in this rebound. right? It looks better. It has reclaimed all moving averages, whereas crude oil has not, right? So it's like, okay, so that makes me like the energy stocks better than crude oil right now. On top of that, I would love an energy pick that is leading the leader. Energy stocks are leading crude oil. I want a leading energy stock, something that's outperforming the sector that maybe is already making a new high and has fully recovered from this recent nonsense. And that brings me to Devon Energy. This has been a stock that's been very, very strong, a leader in the space. And let me explain that real quick. If you look at the year-to-date return, just to pick, I think, a fairly good sample size, we're at 45 bucks. This came into the year, Greg, at, call it 15, just so I can make my math easy. It's up 30 bucks. It's up 200% on the year. Well, I can tell you the energy sector is not up 200%. And I'm pretty sure crude oil is not up 200%. And so leading stock here, the relative strength has been impressive, up 3.8% today. So you have to ask yourself, if you really think crude oil is going to hold support and you think the energy sector holds up okay, do you want to bet that Devon Energy suddenly exhibits relative weakness, suddenly falls out of favor? It could happen, but it's unlikely. Like, I think that strength begets more strength. And so if I'm going to play something directional in the energy space, I like this a little better than, say, an Exxon, which still has some overhead resistance. Okay, so that's my pitch. Now, what about the trade? Well, I'm going to go directional. I want to try to maximize my participation because I'm more bullish on Qualcomm. So $45 stock. Look, I can't help myself but do a spread. It's really hard to make me buy calls. So I'm going to do a call spread. I'm going to buy check my notes. Yeah. I'm going to buy the 45 call. Pretty much the same structure Greg and I have been playing with. Going to buy the 45 and I'm going to sell the 50. Yes, I think 50. $5 wide spread on a $45 stock is pretty good. You try for $10. Think about it. That's like a 20% move. You're getting a little too optimistic there. So I think $5 is a good spread width that makes it realistic. And the pricing is pretty good. I'm going to go to Jan to give this some time. And here we go, Greg. Buy the 45, first strike in. Good liquidity too. Great open interest, tight bid-ask spreads, makes DVN a good trading product. Buy the 45, sell the 50. You're getting about a 22 net delta, kind of the same overall, just as CNI was. $1.64. Risking $1.64 to make 336. So that's a 200% potential return. And I think 50 is doable. And I like the relative cheapness here. It doesn't feel like they're making me pay out the nose. My break even's 46.64. I mean, just to break even, it's got to get to 46.64. DVN, I'm not asking for the moon, man. Just keep doing what you're doing. And I think you get to 50 and we can all party, right? I think this is a great little trade here. And I'll leave it at that. So bull call DVN 45.50 January, $1.64.
Very good. Hard to beat. Nice little breakout there. This thing's been awesome. Hard to complain about it, really. Just ride the wave with this one.
I feel like a schmuck for not having traded this before.
Yeah, I actually, I think I brought this to the scouting report meetings not too long ago, actually. Probably about 3 weeks ago, actually. I'm pretty sure.
Good, dude.
Yeah. No, it looks quality and energy. Like I said, I really like the way energy's rebounded, kind of held its own. So yeah, good pick there. Nice pick, sir.
All right, what you got?
I'm gonna put the wild in wild card tonight, my friend. I'm gonna go a lot of new money homes as opposed to old money homes here. But I'm gonna do it with an old money home stock. So get that. Let's go to McDonald's. I'm loving it. Look at this thing. You want to talk about up, and up. This thing's been gangbusters. Gangbusters, I tell you. Look at this move. What was it? Earlier this year, it was $200 stock, something like that. 202.
Right, yeah.
Yeah, for a blue chip, this thing's going pretty good. So what I did here with this one is I kind of looked at the last few moves there. So the move in November here from the low to the high, just in November there, yeah, from there to there, about 20 points, right? If we go back to around July, middle of July, up to there, about 20 points from there to there. And then the last one I looked at way back here in March, kind of up to the top there, you could go anywhere there, about 20 points, right? So it seems that when McDonald's wants to go, it kind of likes that 20-point range. So I looked at a lot of things here. What I like is this looks like to me, like it's kind of setting up for a cup and handle action here. At a nice rounding bottom, we're sitting there. We've got a top there to break out of. We've got an all-time, well, at least a one-year high here. I think that's probably an all-time high.
It is, yeah.
But even, yeah, look at that weekly chart. That thing's even prettier as far as I'm concerned. But anyway, we're looking for that next breakout. And if we get that breakout and we get that $20 move, I think this thing looks pretty sweet, right? We go from say 260 to get up to around the 280 mark. Okay. So I looked at a number of different things. Could have bought just a long call. You'd have to put out a couple of bucks for that. Not that much, but a fair bit. Looked at a bull call spread. Not a bad trade at all. I wanted to play this in another way. If McDonald's started to decline, if it kind of got cratered here, you can see that when it wants to go down, it has a penchant for doing that as well. So if this thing, or the markets in general, if they happen to be overextended, I didn't want to find myself in a trade where I could get too damaged if this thing gets beat up somehow. So what I looked at was the monthly January. I went and did a ratio spread here. So what I want to do is I want to sell the 260, which is very close to at the money here. So sell the 260, and I want to buy 2 of the 270 calls. So we get 2 of those, 82-cent credit. So we can look at the risk graph there for me, Ty, man. Thank you, sir. Basically, what I'm looking at here is the way McDonald's has been moving. It's been moving well. Like I said, that 20-point move is a thing that it can do. Not a guarantee, but it can do that. So let's say it gets up to that 280 mark. Okay, we're looking at about I think it was $500 or so. If you go to the 280, so about $500, 500 and a half there. If it gets up there, if it craters, if it gets beat up and gets 250, 240, anything like that, you still get a credit of $82 here. Okay, so I got myself an open risk graph on the one side. If I'm totally, completely, utterly wrong, I still can make a couple of shekels on the other side of the graph. And all I really got to do is worry about time decay and having what we call pin risk. If it pins at 270, that's where my major risk is. So you got to make sure that you have, in this particular one here, if we don't get the movement that I expect, I actually have a time stop out here. I would not let this go. Probably if it doesn't move by the first week of January, I'm getting rid of this. I'm not going to let this go to fruition. If it's sitting around that 270 mark or somewhere in there, I don't want to get screwed over by the pin risk. So at the end of the day, so what are we there? So first of January.
You're probably 190 risk.
Yeah, so risking a couple hundred to make 5.5. And like I said, if it craters, who cares? If it craters, you still make $82. Bob's your uncle. So it's an aggressive trade. It's no doubt about it. When you do a ratio spread, it's an aggressive trade. But I like the fact that I can be either completely right and do very well. And if McDonald's continues as it has for a while, I've got that open risk graph. If I'm completely wrong, it still pays me. And if I'm semi-wrong, I can get out without too much damage. That's my wild card. Putting the wild and wild card on a not so wild stock.
You know what? McDonald's was on my short list. I dig that chart. It's very impressive how well this has held up over the last 3 days.
100%.
Yeah. Yes. I like call ratio back spreads in theory. You know what I thought you were going to do? You emphasize the crazy part. I thought you were going to go with buying the 280s and buy like 5 of them and just go hog wild.
I could have done that too, but that's a little bit out there. So
it's asking a bit much. It's asking a bit much.
Yeah.
So awesome. All right. So Greg, we've got a call ratio back spread on McDonald's. And then I had a bull call on DVN. Final round. This is your last time in your life you will have the chance to vote for Greg versus me before Thanksgiving 2021. You better not let this opportunity pass you by. Greg and I care about how many votes there are because it gives more legitimacy to the outcome, right? If 3 people vote, it's almost like, dude, luck, right? If 25 of you vote, we feel a little better about the results. So give us a shot here. Tell us what you think. DVN versus McDonald's. And now, after you throw out a call ratio back spread, I'm like, yeah, I don't know. Maybe I should have done something crazier. Shouldn't have played it so safe with a bull call, but
it was the Hail Mary pass, buddy.
No, it was good. It was good. I like all 6 of these charts though, right? Come on. You guys have been entertained tonight. We've given you 6 really good technical patterns. Whether you want to do on the option side or the stock side, the key, I think, is just the thought process that Greg used and I used to think through finding these ideas. Hopefully you guys got something out of that. Greg, round 2, dude, where's it at? Your percentage I think it was 48 to 52. And
very tight.
It was tight. But I took round 2. We're going to see if they loved your McDonald's.
I'm gonna need a recount. We need everybody to revote. This is Arizona all over again, or Pennsylvania.
So we'll see where the wild card round goes. But who Bears? Is that your favorite game for tomorrow? Favorite football matchup?
It's my team. Yeah, I'm a Bears fan, much like Mr. Tim Justice there. So. But they're playing the lowly Detroit Lions, who have yet to win this season. So it should be embarrassing and entertaining all at the same time.
There you go.
So, yeah.
What's their record? Are they any good?
Who, the Bears?
Mm-hmm.
No, they're mediocre at best. I think I'm not even sure what the record is, but they've got a handful more wins than the Lions do, but that's about it. So
wow,
they're in tough as well. We got a new quarterback and he's learning the ropes. So we got hope for the future, but right now things are not pretty. So
well, listen, I'll be rooting for you. I'll be rooting for the Bears tomorrow.
There you go.
Okay, Adi, I have never thought about being a politician. Actually, the very thought of being a politician actually makes me sick to my stomach, Adi. My wife would kill me before she'd let me become a politician. So not for me. I'll stick to the stocks, man. I'll stick to the stocks. Okay. And Greg doesn't have the chat in here. So I feel like I'm the spokesperson. Greg,
yeah,
Tom says, listen, whenever old school people try new stuff, it just moves me. Super proud of them. Great job, Coach Holmes.
Thank you. I gotta bring it. I've got to bring some wild stuff here because I'm losing. But last time you and I had this little matchup, I lost by the thinnest of margins, and it looks like it happened again this time. So I might have to go all semiconductor on you next time.
Listen, I might be logged in on 4 different devices, voting 4 times and swaying this vote. Like, you don't know. I mean, maybe I am.
See, this honest Canadian here, I don't even vote for myself. So
well, that's why I should be. That's why I should be a politician, because I think about crap like that. Like,
there you go.
I have an iPad. I'm just kidding. Hey, Greg, you killed me with McDonald's. They liked your Mickey D's better than DVN. You took it 57% to 42%. So there you go. There you go.
Consolation prize.
Yeah, 2 to 1 ain't bad. 2 to 1 ain't bad. Look, we are thankful for all of you for hanging out with us tonight. On behalf of Tackle Trading, we want to wish you all a happy Thanksgiving. And if you want to check us out, come check us out. We got some cool stuff. This type of education and much, much more is what you get when you come on the inside. But we will be back next Wednesday. And trust me, Greg's going to be back and he's going to off me one of these weeks. So Greg, I look forward to that, but I live to fight another week. So yeah, I about said Merry Christmas, Greg.
soon, buddy, soon. We got one more holiday.
Not yet. Hold back. Happy Thanksgiving to everybody. Good luck Bears tomorrow. Coach Greg, take us out. What you got to say?
Same thing. Thank you, Tyler. I always have fun doing this. You know what? This is a great community. I always have fun, interacting with the community. I appreciate all the folks out there watching and voting. Yeah, we've got some cool stuff, man. If you're not part of this community, if you're just watching this YouTube for the first time, check us out. I know we got a free trial. We've got some amazing courses. We got some sweet deals right now. You know what? You can't beat this. I'm telling you, I've spent a lot of money and time on my education, and I'll tell you, this is the best value I've ever found. So anyway, happy Thanksgiving to everybody. Enjoy the turkey, enjoy the family, enjoy the friends, and enjoy the football. I know I will be watching as well with my fine American friends. So take care, everybody. Love you all.
Bye-bye.